Okay, hi everyone. Welcome to this video on the power of the price rejector. This is a market recap for June 27th to July 1st, 2016. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, so this is the Orderflows trader chart. And what I'm going to really focus on today is using the Orderflows trader chart in combination with the price rejector. The Orderflows trader chart is a footprint chart. The price rejector is an indicator that will help you pick swing highs and swing lows in the order flow. This is a sell, this is a buy. When you have the red hash, it indicates a sell, this area up here. The hash will appear as soon as the indicator conditions are met. Now, if it changes in the bar, it'll disappear. But once it's drawn, it will not redraw. So once the bar closes and it's there, it's there. Okay, it's not going to change. Now, again, this is an order flows indicator, so it works in real time. If you load a chart, load the indicator, it won't go over the past history because it's reading the data as it comes in. If you want to see how it performed over a certain period, then just, it runs on NinjaTrader. NinjaTrader has a nice market replay function where you can, as long as your computer was open and you're saving the data, you can run it in market replay and it'll read the data as it's coming in, just as it did during the market hours. So keep that in mind. If you're going to get the indicator and load it on your system and say, hey, I don't have any signals. Well, the reason you don't have any signals is because it needs the data to be coming in fresh and read it that way, as opposed to reading the previous data. It runs on NinjaTrader 7. The NinjaTrader 8 version should be coming out in a few weeks' time. But right now, I'm still using NinjaTrader 7. That's why I'm focusing on NinjaTrader 7. NinjaTrader 8 is available, still in beta. And once it comes out officially in beta, then we'll get everything switched over, and any upgrades to NinjaTrader 8 will be free of charge. So what's order flow? Well, order flow is a way to analyze the market based on trades being executed on the bid and the offer, as well as the volume. And you can see here, these are the volumes on the bid, these are the volumes on the offer. And what you want to do is you want to analyze that as well as the volume. Not all prices are the same. If all prices are the same, the market wouldn't move. Okay. When I say not all prices are the same, what I mean is, there's different levels of participation and different types of participation. There's aggressive buying, there's aggressive selling. There's price support, there's price resistance. What causes a market to turn, is what happens at certain price levels in terms of the participation at those levels. What is the price rejector? It's an indicator based on order flow analysis to determine when the last buyer has bought and the last seller has sold, right? So, if you're looking for a reversal, you have to have a move that's going to reverse it. If you're going to be sitting here trading inside a range like you see in here, yeah, the market did go up, but you're not getting any signals here. You got it earlier here, then the market went sideways, and then it went up. But if the market is trading sideways, generally you're not going to get any signals. What you want to do, right? You want to catch ends of moves and beginnings of new moves is ideally what you want to do. You're not going to, it's going to be hard to make money when the market is just trading sideways like this. If you took this signal here, this is 929, and you're just sitting in here going back and forth, you're thinking, oh, Jesus, this is the worst indicator ever. We're not moving, and then it pops up. Ideally what you like is, you get the signal here, then boom, you get the nice sell-off. But, you can only do what the market's going to give you. So, the order flows trader and price rejector software runs on the NinjaTrader platform. You can go to their website, www.ninjatrader.com, and you can download a copy of the software. It's free, it's easy to use, and for the order flows trader and the price rejector, you just import it right into NinjaTrader and trade. It's designed, ideally, the price rejector is designed for an order flows trader chart. You don't need, okay, now I'm going to specify. You don't need the Orderflows trader chart, although, you know, I do recommend it. I mean, yes, it is my software. People will say, well, you put out these videos, you know, but you have to buy your software. Well, you want to drive, you got to buy a car. But we've also programmed the price rejector to run on a normal bar chart. So if you don't want to deal with a footprint chart, you can just run it on a normal bar chart. Although, you know, I do recommend using a footprint chart, and ideally I do recommend using my Orderflows trader chart, because, you know, I take a footprint chart to the next level, you know, and I have ways, you know, simple ways that show you how you can understand the order flow better. I mean, you can have a footprint chart, but if you don't know what you're looking at, then what's the point? So again, you know, there's no PhD needed on this. It's not rocket science, but there's a science to it. And, you know, you don't need a live trading room to sit there and learn this. It's really very simple to use. So, you know, let's look at, you know, I like to show how it performs over time, rather than just cherry pick a chart here and there and show you the best chart and say this is how it works every time. Because, you know what, there's winners, there's losers, okay? And, you know, I want you to try to be upfront so you can see that and you can understand, you know, what sort of profit potentials or losses you're going to be looking at on trades. So let's get started. Okay, so this is June 27. It's Monday. You know, I started my charts a little bit late here. It's 9:29 in the morning. Okay, yeah, you got a buy here. We'll disregard this buy for now. Market goes up here, boom, you get a sell. Okay, now, you know, I won't get into the ratios because, you know, it's an added feature of the Orderflows trader chart. But what I want you to see is how just the price rejector is working. You know, when there's something with the Orderflows trader chart, I'll also highlight it. Okay, so, you know, it gives you a sell here. Now again, you're not getting short right at this high. This is indicating at the top of the bar. You know, yeah, I could have had it drawn down here, but, you know, I like to draw it on the top, and just as the buy will appear on the bottom. So as soon as, you know, the conditions are met, it will show up. If the conditions in that bar change, it will disappear. I mean, if it changes that the conditions are not met, then it will disappear. It will stay there as long as the conditions are met. Then once the bar closes, it'll print, it'll stay there, and it won't come off. Okay? So it's not going to change, you know, if we take out and make a new high or anything like that. Once it draws, it's drawn there. It doesn't change on your chart. Okay, so, you know, but, you know, that said, you know, if you close your charts down, you know, whatever has been drawn will disappear when you reopen your charts. Okay, so this was a nice short. So don't think of getting short right at the top of this bar. You're getting short in the next bar. You know, or even if you're aggressive, you can get short towards the end of the bar. This is a 4-range E-mini chart. Okay, people use different chart time frames. That's fine. You know, it works with all sorts. I'll try and show you another chart later that's maybe, you know, not what you're used to looking at. Okay, so this was a sell. This was a buy. You know, here. And, you know, market went up. Here's a sell, another sell, and market came off. You know, this one I like a lot more because it's got a ratio. You know, my ratios. Yeah, I talk about ratios in the order flow. Whenever you get a ratio, it's a good thing. You know, it's a potential short, but when you work it with the price rejector, I think it's even better. Okay, here's a buy. You know, this one failed. A couple more buys. These failed pretty quick. You know, so you're not sitting there going sideways and waiting for it to, you know, to work or not. You know, it's either going to give you a good trade or a bad trade. Okay, let's see, anything appear? Nothing. You know, this is the Monday after the Brexit vote. Okay, so market was kind of all over the place. Here's a nice buy. Boom. You know, what sort of risk are you going to be having on trade? Well, if you're getting long here, you know, the reason why we have it, you know, prices, the indicator drawn on the bottom is because if we get below this, we violate this low price, then there's no more reason to be in the trade. So, you know, that's why it's drawn on the low here. Yeah, I probably could have had it drawn on the next one, but I'd much rather have it, you know, the entry signal appearing, you know, as soon as it happens. But, you know, if you're getting long here, as soon as this bar closes and the next bar opens, you know, your risk is just down to here. It's basically the risk of this bar, you know, plus a tick. So, you know, even if you want to finesse your entry, yeah, you could even throw a bid in somewhere in the body of this bar, ideally at the point of control, but oftentimes, points of control act as support or resistance. So it may trade there and then bounce up. So, somewhere inside the body of the bar is a good entry, a little bit better than just getting long, or getting short right as soon as the next bar opens. But your stop is pretty well defined. It's just outside of this line here. So you're talking, right? You had those few, okay, here, right? You're getting long, 1991.5. Yeah, the market, trades up to the 95, 96 level, but you're only risking one bar. I mean, how many bars up is that? 6, 7 bars. I mean, earlier, right? We had these losses, boom, 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 right in a row. People will say, oh, this indicator sucks because, it had those losses, right in a row. Where is it here? Okay, this one started out and it failed. This one failed. Sometimes when you're trying to find a low, a swing low, the market's got other ideas and it's going to go lower. Okay, so boom, boom, boom. These are also divergences. You got positive deltas on the new lows. I mean, it looked like these were going to be the lows, but you know what? Your stop is, you have a stop. You have to use a stop. And you're not risking very much. You're risking basically, 1 bar. Maybe over a bar, maybe even less than a bar if you're trying to get a better entry and work somewhere in the body of, the previous bar of the, entry bar. So, say you're trying to get in here or here, you're basically only risking 1 point. So would you risk, 1 point, trying to catch, where's that one? Trying to catch a nice move, that's, how many points? Like here, yeah, you're risking that 1 point. And you're getting, 5 points return. You don't have to be right every single time. Yeah, it sucks when you get 2 or 3 losers in a row. Here's another one. Boom. Okay, this one's not going to give you that second chance, or that, if you're trying to finesse your entry, it's not going to give it to you. You really got to get in at the end. And then, it's, from 93 up to 95, you get a sell signal right here in this bar. So, you're getting somewhere short around 4.5. Market trades right up to the top there. It's the price rejector. It's telling you that these levels are being rejected. The levels above this area are being rejected, just as the prices below here are being rejected. Okay, this one just went sideways. Yeah, it started to make its move, but it just sort of went sideways. And again, if you're sitting this trade for 10 minutes and it's not going anywhere, you should be thinking of getting out. I mean, don't think you're going to be holding the trade for 30 minutes waiting for it to go into your favor. Yeah, here's a sell. Okay, and again, it trades from, what is that, the 90 level down to 88, 87.5. Here's a buy. And this one didn't really work out. It started to. Came down, went through it by a tick. Boom, then we're still looking for its low. It's still looking for the low. This one any better? Yeah, this one worked out, 85.5 up to, 87. You gotta sell. This one didn't work. Time is it now? It's 2 o'clock. Yeah, this one started to, I don't know if you could have got something out of it, 89, 90, maybe a point, but still, I'm not just looking for a point only. Yeah, this one didn't work. This one did, nicely. You're talking from 86.5 up to, the 90 area. Okay, where are we? We're coming up on 3 o'clock here. Okay, here's a nice sell right here. It's 240. Boom. And then you're getting short somewhere around here, 93 down to the 90s. Then you get a buy, and you shoot right back up to those levels. Okay, coming on 3 o'clock here. Cash close is 3 o'clock. Okay, and nothing for the rest of that day. Let's look at the next day. Okay, this is the next day, 28th of June, Tuesday. Things calmed down a bit, after that Brexit vote. So, 820, you get a buy here. Yeah, I got through it by a tick, and then gone up. Again, if you're using a 1-tick stop, you'd be stopped out. If you're using the 2-tick stop, you'd still be in the trade. It's up to you. This one didn't work out. This one failed. This is right after the cash open. You had a ratio there. Didn't work out. Where are we here? Nothing. Here's a buy. This was interesting. You got the nice big imbalance there, 1600. It started to work and it just went sideways on you. Again, you're in a trade at 9, 10 after 9, 9:13, or is that, sorry, 9:16. You know, and you're holding it into this area. You know, it's not working out. You know, after, you know, at what point are you going to get out? You know, are you going to let it go to your stop price, or are you going to manage the trade and get out? You know, this was a buy that failed. This one, yeah, we broke through it by a tick. You know, then rallied. Oops. Fail, fail. No, but you know, I want you to see this. You know, sure, there's some failures. You know, this was a decent one. You know, 9.5 up to 11.5. You know, what did we do? We came right back down to that level before popping back up again. This market took off really strongly late in the day, if you remember. This was a sell. This was late. This one failed. Okay, so that was it. You know, there's some winners, there were some losers. You know, but if you're only risking a point, but you're getting, you know, 2-3 points out of a winner, you know, you don't need 50-50. Okay, this is the 29th, Wednesday. Yeah, 6 in the morning, there was a buy here, 6:20. Yeah, it did pop up a little bit, came down. Probably would have stopped out. You know, when I see it come up like this and it hits a ratio, a number, you know, in my order flows trader, you know, I know I'll be fighting it if I'm going to be expecting the market to keep going up. So it's usually a sign to me to get out if, you know, once I'm long, I get something in the order flow telling me to get out. I mean, you know, that's what you know, when you're trading and things change in the market, then you have to get out. I mean, don't stay in the trade if, you know, the market's telling you that, hey, it's time to get out. I mean, that's the difference between a good trader, you know, a winning trader and a losing trader. Losing traders don't know when to get out. Winning traders do. Okay, this is sort of a bad quote here, but then, you know, we got this buy signal here, 823. You know, we've shot up, a nice move up. Here's another buy. You know, this one went up. You know, I remember this day I had some very bad connections. I think some of my quotes were messed up. You know, a couple buys here. Shot up. You know, another buy there. You know, it shot up. What do we got here? Anything? Nothing. This was a buy that failed. Yeah, I mean, there's going to be days where you have some, you know, a lot of good trades, and then days you have some losers. This was a sell. You know, just sort of went sideways on you. This was a sell that failed. And that was the end of the day. Okay, so moving on to June 30th. Again, 6 in the morning. I don't know if you want to be trading at that time. I mean, I start to look at the market at 6. I mean, really, I think the volume really starts. I mean, volume is decent starting at 2 a.m. when Europe opens, but you know, 6 a.m., 7 a.m. is really the time I really start paying attention to what's happening in the S&Ps. So, I mean, this was a buy here at 6 a.m. You know, it went sideways and failed. Okay, now we're coming into, what time is it here? 7:40. This sell, it failed. You know, it's still looking for its high here, its high area. We got through, you know, we got a ratio, which is, you know, something that I like. You know, the blue number here. You know, it didn't work out. Like I said, we're still looking for that high. Okay, and here we finally hit that high. You know, oftentimes, you know, I would love to have that one indicator that can find the high every single time. But you know what? That indicator doesn't exist. Sometimes the market is still searching for that high. So here, you know, we fail here, fail here, boom, it won. So, you know, you lose a point, and, you know, here, you get it all back. This was a sell, you know, kind of worked out, kind of moving around pretty quick there. A lot of imbalances. Here's a buy, boom, straight up. Here's a sell, kind of going sideways to a little bit lower. Finally, it falls over to another buy. You know, the market shot right up. Here's a sell. This one failed. You know, you had, what did you have? You had nice winner, nice winner, nice winner, Nice winner, then a loser. You had a couple losers earlier, but you know what? These winners are making up for it. Are making up for those other losers. This one started to work out, then turned around, but you got an indication here in the order flow that it's not working out. Here was a ratio, and you got a quick little move lower, and then going sideways. Once a move starts happening and then goes sideways, I'm always wary that it's going to not work out. Here you get the sell, you get short, and then you get the green bar, then you get the doji. It's even once you're starting to get in here, you got more up movement than down movement. Then the market pops up. This was this. What time is this? 10:30. This one failed. Okay, then you get your next signal. Boom. You're getting short at 7.5, 7. Down to down to the 4 level, 4.5. This was a buy that failed. Here's a sell. This is a sell with a ratio, and it had a nice move. 82 3/4, 83 down to 81, 81 1/4, where it went from ratio here to ratio here, and then it went back up. So you're getting 2 points. Then you're getting another 2 points at least at the minimum. People say, well, where's your profit target? Well, I know where my limit is. I mean, my loss, my stop is going to be. But, once I'm in a trade and I see things in the order flow telling me that, hey, there could be a little bit more to it, like I see ratio, I'm inclined to want to stay in it. I don't want to just bail just right away. This one went sideways and then failed. I say I get here, I think it's going to work again, and then it fails. Trades fail. You do have losing trades. Here's one. We start to pop up. You get a ratio, which is kind of negative, a negative ratio. Come back down, but we still didn't. It's not enough to stop me out. We sort of stop and turn. Right at this level, right up a tick above the low, and then you turn and move right back up. This one fails. Two o'clock here. Here's a buy. Again, it's going from 84 up to the 87 area. You get a sell, it just sort of goes sideways, pops up here, probably stops you out. A buy that fails, a buy that just goes sideways. You go into the cash close. This is a buy. It's after 3 p.m. After the cash close. You get movements, and sometimes you get I'll say violent movements, but you get big movements after the cash close on lesser volume. So it's up to you if you want to trade outside of the cash hours. You can. Okay, then look at the next day here. So you can see what your risk is, but you could also see you're getting, when it's right, you're getting some powerful moves. Okay, so this is Friday, July 1st. If I remember right, there wasn't that great a day for trading, but still, nevertheless, 6 o'clock, a couple sells here, didn't really work out. This one failed. This one, kind of turned around on you, failed, stopped you out. Okay, here's a sell. This is 839. It didn't work out. This sell also didn't work out. Those are 2 sells with ratios that didn't work out. It's unfortunate. There are days where it's just everything everything that normally works just doesn't work. Sometimes it's just due to the market. So here's a sell. Came right back up within a tick of it and sold off. Here, this one, sort of went sideways before coming in and stopping you out. Here was a buy. It was kind of nothing major. It did shoot up and then just went sideways on you. Honestly, this was a strange week for trading. There's just a lot of other stuff going on in the market that this isn't something to quantify. With the whole Brexit vote, and it's terrible for the world. Also, no, it's the best thing to happen for Britain. And the market goes up. All of a sudden, everybody wants to make trade deals with Britain, with the UK. Whereas last week, everyone, you had Obama saying, oh, Britain's going back to the end of the line. Well, now everyone's wanting to deal with the new Britain, it seems. So, the stock market's back up, a lot of volatility in the market, but things are back to normal again. It was funny because I felt that the sell-off was a big overreaction, but then the rally back, covering back everything you lost, was a bit exuberant. So what can you do? Then here's a nice buy. Here's a buy, right? You don't have the ratio here. You got the ratio at the same level. And, it's gone up from this, 91, 92 level up to, 96, 97. It's a nice move. And that was it for the week on the S&Ps. So, I mean, you could see, you saw all the trading days for the week, and you see, the winners, the losers. You could decide for yourself if it's something you could add to your trading. Okay, well, real quick, since I got some time, I'm going to show you the crude oil. This is the August contract. This is a uni Renko chart, and on this chart, I've got two indicators. I've got the price rejector and the delta scalper, and it's a normal bar chart, so you can see how these things work on a normal bar chart. Now, the delta scalper is going to be these triangles: the up triangle for a buy and a down triangle for a sell, and also it draws out a support level for you, so you can see if this is going to hold as support. Oftentimes, when the delta scalper basically reads the delta for you. The delta is the difference between the volume traded on the bid, the volume traded on the offer. And positive delta, generally you have an up move. Negative delta generally indicates a down move. But there's more to it than that. But the delta scalper is another order flows indicator. Now, when you get the Orderflows Trader software package, the delta scalper and the price rejector are additional indicators. If you just have the Orderflows Trader, you can read this stuff by yourself. You don't need these indicators. The indicators were designed to make it easier for people. But if you can read the order flows yourself, then great. But if you're trading a bar chart and you want to add order flows into it, you can use the indicators. Although I do think you can trade on the Orderflows Trader chart, footprint chart, with the delta scalper and the price rejector, and I think it's a perfect combination. So again, crude oil, August crude. We'll just go through these indicators for the week. I'll start around 6 a.m., 5 a.m. It's a Renko chart, so it's a little bit different than a footprint chart. It's more of a bar chart. So here's a buy. This is a delta scalper. It sort of went up. Had a nice up move, and then sort of hung around. Up again, off, up again. I'll get people. They'll see this chart and say, well, this trade wasn't that good because down here it sold off. Well, you know what? It rallied here from 55 up to 75 once, twice, third time. If you're not getting out here at 75 by this third time, and you're waiting for it to come down and it stops you out down here, you really shouldn't be. You should reassess whether you want to trade or not, because you're not making good trading decisions. But I do get people sending me charts saying, hey, I got stopped out down here. Why? Well, you had all this time here where it's in the money, and you're not taking your profits. This is, you're getting in at 7:50 and you're holding it until 9:30, 10 o'clock. You shouldn't be trading on a shorter term chart. You should be trading on a longer term chart. You're trading on a shorter term chart, then you should be getting out sooner rather than later. It's not you buy it and you hold it until infinity, until it goes and makes $10,000. I mean, come on. I mean, but some people do. Some people do. I mean, there's, and then they get upset that they lost money. But I think they should reassess whether they should be trading or not. I mean, I don't want to sound negative, but I mean, people come to the markets and they think, hey, trading is easy. Trading is not easy. Some of the sharpest minds in the world are attracted to the markets, and they lose money. That's just how it goes, unfortunately. Not everybody is going to be a successful trader. Yeah, we would like all to be successful, but not everybody can be successful. Sometimes people have what they call fatal flaws that, no matter what they do, they're going to fail at something. So anyway, this was a buy. You had to have gotten something out of this trade. at a bare minimum, you know, at least a tick. I mean, if you think, oh, this is a losing trade because, you know, you got a buy signal here and look, it's sold off later. I mean, come on, it spent a good hour in your favor, and that was the only one for that day. You know, you had one signal that day, and this is a decent one. You just go forward. Okay, this is the price. This is the Delta Scalper. Again, it's 5:30. I don't know if you want to be trading at that time. You can. 5 in the morning. You know, it's sort of the old IPE hours still. So, you know, Brent Crude is you know, available for trading, and you know, there is some ARB, so you get some decent moves. Again, this was a nice move. You know, this one failed. Then you got this next signal here at 9 o'clock. This is the 28th of June. You know, you're getting short somewhere around here, 70, 48.70, 47.68. You know, this is a nice move. I mean, look at that. It's just straight down. Basically no reason to be getting out of this trade. You come down here, you got the Delta Scalper buy. Yeah, this is at 47, below 4,700. So, you know, if you can't get at least 50 cents out of this move, you know, here is a little different. Here you're getting a smaller move, but you know, this one is really, you know, where's the green? Where's the green bars? You know, what's the market? You know, is it telling you to get out here? No. Is it telling you to get out here? No. You know, once you start stringing together some green bars, you know, and yeah, maybe down here you'd be looking to get out because you got 2 bars in a row. But, you know, if it's just all red, you know, why are you getting out here? Why are you getting out here? You shouldn't. You should be getting out once the market's telling you something else. But, you know, but that's a nice move. You know, 47.65, 47.60 even. You know, that's a 60-cent move. Then you get a buy signal here, and boom, you know, basically, you know, straight up, you know, another 25-cent move. You know, honestly, I would have gotten out here. You know, not up here. I'd love to say, yeah, I got out here. Once I see 3 red candles, you know, I'm usually looking to bail out. Okay, this is the price rejector. Is this hash? The arrow is the Delta Scalper. The hash line, like here and here, is the price rejector. This one failed, but then you get another buy signal shortly thereafter. And, you know, it's a nice move from the 65 area up to, you know, the 90s, even higher, up in, you know, call it whatever, you know, call it just, you know, getting in at 60, out at 90. Or sorry, that's not 60. What is that? That's about 70. You know, it's good 20 cents. You know, I think you could have gotten more, but, you know, I'm not going to claim it. Okay, what is this? This is the 29th of June. This was, you know, a nice buy here. Yeah, it kind of stopped you out. Honestly, I would have been stopped out of this. Are we here? Then boom. Oh, okay, it's 9:30. It's Wednesday. You got the numbers coming out, the inventory numbers. So you know, you get a signal here. I'm not one to trade during numbers, just because, you know, I know sometimes the volume isn't that great. But you know, if you got the balls and you like to trade during that time, you've been amply rewarded. You know, that's almost that's a dollar move from 48.30 up to 49.20. Okay, 90 cents. Some will say it's not a dollar, but whatever. So even if you didn't trade this and you missed this whole thing and you're kicking yourself, because, you know, it did happen initially pretty quick here. This is 9:30. This is like 9:30 and 3 seconds, if I remember right. And if you're trying to buy, realistically you're buying somewhere in here, you know, towards the later part. You know, let's say, you know, say you don't want to trade during that number and you miss this trade. Okay, that's fine. You just, you know, wait. Here you get another sell signal. Boom. You know, it's a nice little winner. Yeah, it's not as nice as this big up move. And here you get a couple sells, you know, in succession. You know, this is, you know, 15 down to 90. That's, you know, this is a, what do you want to call this? You know, a 10-cent move. This is 15 cents, 25 cents. This one failed. Okay, and then, you know, then that was it for the day. So let's move on to the 30th. Okay, well, that's in the evening session. You know, 2 in the morning, you know, it's debatable whether you want to be looking. This day, I remember, was a bit trickier. You know, buy that failed, the buy started to work, started to come down. You know, again, if you know, you're buying here, then you got red, red, red. You know, usually after 2 reds, I'm already thinking it's going to stop me out. You know, here you got shoots up, then you got red, red, red. Yeah, do I need it to come all the way down to stop me out down here after 3 reds? I'm more inclined to just to try and get out here. You can get out at you know, a smaller loss than letting it come to your stop price. This one just, started then failed immediately. This one didn't work out. This was a tough morning. You start out the day with 4 losing trades, and then boom. So let's look at this real quick. Let's analyze it. Say you're getting short here. Okay, we'll say even here. Oops. And you have your stop up here. What is that? Hey, that's not giving me the right numbers. What is it here? Okay, so yeah, okay, that's 5 ticks here. So say you're getting short here, and you have you're using a 5 tick stop. I mean, let's make sure. I use that ruler, but on these wrinkled charts, it's a bit goofy sometimes. But okay, cross here. So say you're getting short. You say you get short here. This is the sell. 75. Where's your stop going to be? Somewhere up in here. 75, 82. Okay, so what are you talking? You're talking this is 7. What is that? 7 ticks. And that's being very generous. Okay, that's getting short here and having your stop way up here. Okay, way past this area. So it's 4 losers in a row. So what is that? 7 ticks times 4. That's 28 cents. Okay, well now you got to buy here. This is the price rejector giving you a buy. Okay, we'll be very generous. We'll call it, make the math easy, 48.65. All the way up to into here, 4900, 4905. Say you get out here, how many ticks is that? 65 to 05, that's 40 ticks. So on this one trade, assuming you just got out in here because you got 3 red bars going down, you made it all back on one trade. I really hate to try and get everything back on one trade, but with these with order flow indicators, you can eat. Usually it's going to take me 2 or 3 trades to get back my losers. Not necessarily one trade. It's nice when it happens. This one fails immediately. This one, it shoots up and then starts to come down. So you could have got something out of that trade. Okay, and that was it for the day. You had more losers than winners. You only had about 2 winners, if I remember. But you had a nice one. The nice winner was nice and made up for everything. And let's look at Friday, July 1st. Okay, 8 o'clock, 8:06, whatever, 48:05. Goes up into here. You got 3 down bars. Yeah, I'd probably be looking to get out in here. That's quick 30 points. Yeah, I'd love to see you just buy here and you get out, up here at the high. I mean, how many times do you see, people trying to sell you indicators say, yeah, you buy here, you sell here. I mean, come on, be realistic. You're getting along in here, and then you get, 3 down candles, 3 red candles. That's really where you're going to be looking to get out somewhere in there, because you see the market just going sideways now. Again, I'm not saying you're going to be holding it from here all the way into here, but realistically, you'd be looking to get out somewhere in here. This is really the first sign that you should be getting out. Yeah, it later turned and went up, but honestly, this is where you'd be getting out. So you're getting in at around this 4800, 4805 level, and you're getting out somewhere around 4835, 4840. And anything else that day? Yeah, this one sell started to work. Turned out this was late in the day, and then no, that was it for the day. So 2 trades, 1 winner, 1 nice big winner, 1 1 loser. You're getting short somewhere around here, 48.75, and your stop is up here at 48.80, somewhere up in here. So you had 1 winner for how many ticks? 30 ticks, 40 ticks. 1 loser for 5 ticks. I mean, you should be happy with that. I mean, some people want every single trade to be a winner. They don't want to see this, but you know what? That happens. And even going back to this previous day, people are going to see this and they'll send me this chart. Okay, well, look at this. This failed. yeah, it did fail. Okay, but that's part of trading. But you got to stick it out. Because this is you got to risk. Trading involves risk. You got to take risks, and yeah, you're going to lose here. You're going to take risks and lose, but you're going to be rewarded eventually. Okay, so again, just to recap, the price rejector, the Orderflows trader charts, and the Delta Scalper, they all run on the NinjaTrader trading platform. You can download NinjaTrader for free. You don't need a paid version. Paid version is good to have, especially if you're going to be trading through NinjaTrader brokerage. You'll get very low commission rates. These indicators, the price rejector and the Delta Scalper that you saw also, they work on the Orderflows trader chart as well as normal bar charts. That's why I showed you the Renko chart. And I think, honestly, to get the most out of it, you should use the Orderflows trader charts. And it will work on, these will work on just about every futures market and time frames. I mean, intraday. I mean, don't think you're going to use an Orderflows chart or Delta Scalper on a daily chart or a monthly chart, because it won't make any sense. The order flows, you're reading the order flow as it comes into the market, so you're not going to be trading very long term. I do know people that trade order flow using a 30-minute chart, but they're more of swing traders, so it can be done. I think you have to understand the markets better first before you can accomplish that. I don't think a new person could come in and start swing trading. Generally swing traders are more experienced, and they understand risk, because there is more risk with swing trading because you're going to be holding a position for a longer time. If you're a shorter term time frame trader, you're holding a trade for a minute, 5 minutes, 10 minutes, 30 minutes max. So take all that stuff into account. Now, if you're interested in the software, you can email me at mike@orderflows. I'll give you a special deal for everything. So, my email is mike@orderflows.com, or you can just go to my website, www.orderflows.com. You can see the price rejector at www.pricerejector.com, or you can, what am I doing? You could go to www.delta Scalper. So you want to learn more about the Delta Scalper, go to go to deltascalper.com, and you can learn more about all these indicators. Again, I think order flow trading is probably the best way to look at the market. I mean, if you're new to trading, don't mess around. Don't spend your time, waste your time trying to reinvent the wheel with MACD, moving averages. I mean, all that stuff's been tested to death. And yeah, you may find an edge short term, but you're not really trading. You're really just reacting to an indicator. You'd rather have something that's taking the information as it comes in real time and giving you decisions that you can trade off of. If you're trading, I said, you're using an average or a MACD, you're looking at, you're taking price and I'll say distorting it, bastardizing it is probably a better term, and trying to curve fit it to something that you think works. Why don't you just learn to analyze the market as the data is coming in, and read it? And that's how the best traders trade. They analyze what's happening in the market. They don't analyze an indicator that's massaging price action, or it's not even price action, just massaging price. So again, I think order flow is the best way to trade the market. I've been in the markets for 20 years, and trust me, I know a lot of successful traders, and I've yet to meet any that are using averages or oscillators or things like that. Now, that said, there probably is a small handful of people that are able to be successful. Maybe, I don't know. I've yet to meet one on an institutional level. And by institutional level, I mean someone that trades real size. Someone that's trading in their den, once in a while, using averages. Hey, great, more power to you. But if you want to be successful over time and survive in this game, you really need to know how to read the market and understand what's happening in the market. So again, thanks for watching this video, and I'll see you on the inside. Bye-bye.